All right, everybody ready? Here we are, about 30 seconds out of here. I see some people in the chat saying they're tuning in from North Carolina, Georgia. Welcome, Evelyn, George, Levis, Lourdes, Paul, Senny, Terry. Great to have all you here with us on a Sunday evening. Mountain Tactical, George Tech. This is going to be an awesome session. My name is Jonathan. I've been with Benzinga for a little over 4 years now, and it's my pleasure to introduce to you the one and only Nick Chahine. So Nick is in the house here, and we're going to have an awesome session here. We're going to cover the overall market. We're going to cover some tickers that you want to pay attention to in the upcoming week, as well as some solid, rock solid principles in how to trade consistently on a day-to-day basis. So with that being said, Nick, welcome. Glad to have you here, man. And I'll stop sharing so that we can hear ourselves think. But
yeah,
how you doing?
The music is mesmerizing, but I still would like to hear us.
Right. And for about like 10 seconds there, it was still playing in my headset after I turned it off for you. But how's it going, man? It's been a wild past couple weeks here in the market.
It's been crazy. Been busy with the membership and trying to keep everybody like in check. Emotionally, it's hard. Everybody wants to do something. Everything looks like a bargain, and you can't trust anything because this and that is getting in the way. So it's pretty tricky now, and it's more important now to do the right thing than probably ever before. So it is. It's important for people to get some basics down and explore new tools. And I'm adding new tools as I go. Last week, I added one tool. This weekend, I may have added another. I'm still toying with it. So it's constantly evolving. I'll share a story a little bit later as to what, one of those tools yielded immediate results because of how I used it. And I saw something and I took note of it and I shared it and I made a trade, and it was an immediate big hit. It was a bearish trade, but because of one tiny tool and one hint in that tool. So there isn't one perfect way of prepping for all this, but there are a whole bunch of things we can do to give ourselves a better chance.
Tom is saying, looks like drinking Monster will keep your hair. Tom, yeah, I should have drank more Monster Energy. And
you should drink this stuff. Well, I'm not
bang.
sharing my
Yeah,
screen,
yeah.
but anyway, yeah, maybe this stuff, bang, bang, or C4. They get
Yeah,
you
yeah.
there, but it's not jittery.
Yeah, bang is what I go to when I can't do more coffee.
Yeah,
But yeah, and so before we dive into the meat of today's session, do you just want to share a little bit about yourself, your trading history, just for people that aren't familiar with you?
sure. I currently have a black eye, a busted nose, and I had a sparring. I fight for a sport, and yesterday's sparring session got a little crazy. So I'm 54, and I still think I can beat these 25-year-olds, and they're tough, and they don't hold back punches, literally. But as far as trading, I started out as an electrical engineer, and then I went into business, and then ended up being a CFO. But all along the way, I've been investing. And then, I don't know, 2000, 2005, I don't know when, I quit everything else. And I started doing this. And 2011, I got together with you guys. Well, you weren't there. But anyway, I got together with Benzinga, and we formed a good partnership. We work together. I don't work for Benzinga, but I love to work with Benzinga, and I do all the time. So we created pretty good offering, and we're helping traders get better. And you'll see today, it's just going to be simple. The message is very simple. The Wall Street type are trying to pull a fast one over us. I think we can match them up wits wise. So there's nothing extraordinary that we need to learn, just very basic things. So hopefully we can get that point across. So as far as what I do during the day is I have the chat room with you guys, and I'm chatting online with literally hundreds of other traders of all kinds, not just options. I like options, but we have futures traders, we have equity traders, we have a lot of options traders, and a whole bunch of mixed. And some of the options people are starting to do futures trading right now, but it's all the same. It's all the same. And I can help with all of it because it's all based on logic and charts. So we think like a machine. We blend it with the human thinking, and we come up with pretty good stuff. So I also started sharing my screen live, so there's nothing I can hide. So I'll show you in a little bit what you would be seeing all day every day if you're in my room. And I've just literally upgraded everything here. I'm waiting for my giant monitor to come in.
Nice.
Amazon is crazy. Last night 9 p.m. I ordered a switch, an unmanaged switch for the internet. It's already installed. It not only got here, I was like, I'm drinking coffee. It's like, your product has been delivered. I'm like, what? I just ordered it. Boom, it's installed. Now I've got a full gigabyte of speed. I can transmit. So anyway, so the idea is to find short-term opportunities, but spend all day, and I mean all day, discussing all kinds of opportunities. I started the room as only fast trades, no discussions, nobody say anything. It was impossible. Everybody wants to say everything. So I was like, all right, let's just open it up. We'll discuss whatever. So it's a lot of fast trades available, and a lot of discussions of all kinds of setups and trades and trade management. So I think it's something special. I think it's something really special. 220, 260 people. It's just crazy that it's there. But we do the right thing. That's the basic mentality. Don't make mistakes.
And just for everybody in the chat, wherever you're listening in from or watching from, go ahead, do us a favor and throw a number 1 in the chat if you're mainly focused on day trading, a number 2 in the chat if you're mainly focused on investing or swing trading, and a number 3 if you're just want everything.
The kitchen sink.
Yeah, you want the whole kitchen sink. So that'll just give us a better idea of where everyone's coming from. I see Kurt in there with the 2. Thanks, Kurt. Stocks, no options. That's great, Evelyn. There'll still be lots of good content here for you today. Femi wants everything. Reading charts. Evelyn, you're in the right place. And so Nick, just
sign up, Evelyn.
Yeah.
I bet you're going to love it. I almost can guarantee it. Yeah.
And we'll definitely dig into some charts today. I see a lot of day traders here on YouTube as well. And with just the context, the big picture of what we're looking at, Nick, you've been talking for weeks about the importance of holding up some of these support levels on the SPY, on the other indices from the 24th of February, from January. So do you just want to give us a broad picture perspective by sharing a little bit more of your analysis on the SPY, and then we could dig into more of like the individual equities?
Sure. Did you want to me share a screen?
Yeah, that'd probably be easiest rather than rather than me driving.
Okay.
I mean, I've got all your charts, so it's not that hard for me to bring up
I'll do
bring
it.
up the SPY.
Okay, here we go. Is that okay?
Perfect.
Okay. So I'm sharing my desktop, and so this is the S&P weekly chart. It's kind of like, to zoom out, I don't have any lines. I do have some dashed lines. Those are alerts for me. So back in November, I said, why don't we buy some protection? I sent out a video on how to do it. And at the time, the VIX was under 15, I think. And I said, let's get, buying the VIX calls would be a cheap way of doing it, or buying put spreads in the S&P. And then the markets fell apart. So I think it was November 17th. So somewhere in here. And then the market started doing this. So we didn't need insurance at the time. I said, insurance is so cheap. What prompted me to do this was that the VIX was so low, and we had all the same problems we've had before, and we were at all-time highs. I said, where is the VIX going to go? Not anywhere further lower than here. So why not buy some? So you can't buy the VIX. You can buy calls on the VIX. And if you buy them 2 months out, you're golden. That thing is not going to lose much value. It's like renting insurance. It's like calling up AAA and saying, I'd like to rent insurance for about 2 months and not pay for it. And that's exactly what it did. What happened? Those who did that, and then the VIX went ballistic, they made a lot of money. It's not profits, because they probably had losses somewhere else. It just offset some of those losses. And if you bought a put spread, you made also offsetting profits. So now it's a little difficult with the VIX being over 30. It's not the same scenario. However, I say now, practice ABCs. So I came up with that acronym so to stick it in people's head. I tried 1, 2, 3, nobody did it. Well, not nobody. It wasn't. So I was like, okay, I need an acronym. So ABCs. So whenever we get rallies, practice your ABCs, which is 1, A, add insurance if you need it. B, book profits much faster than you would otherwise. And C, close the losers that get relief on pops. So if you get a morning pop, like on Friday, the pre-market was a rally. So I sent my morning note. I send out my notes in the morning. I said, A, don't get too happy just chasing this rally. We're going into a buzzsaw next week. And then immediately after I sent out a note, I looked at one of my tools and I was like, uh-oh, there might be trouble here. So I sent a note and I said, I see a little sign. It's a tool I don't use often, but it's been pretty reliable for that specific message. It was a bearish message, and I'll share it in a little bit if you want to. And I said, for that, I'm buying puts for the day and into next week, puts or put spreads. And I bought puts in the morning. And by the end of the day, the puts were up like 120% because the market went south the day. And I also said, I'm going to be long some TLT based on my own guess. And that also provided like 50, 60% win immediately in the day. So it's not like I guessed it completely out of the blue. We had signs. So if we just use logic, we will most likely avoid the easy mistakes. For example, here we're falling. This is the S&P, SPY. So it's the ETF, not the index, but they move the same way. So we placed the bottom on February 24th. We had a bottom on January 24th. That was the one from Bullard. The Bullard comment threw everybody into a tizzy. We bounced really hard. And then the February 24th was the war in the Ukraine, which was a much more serious headline, everybody would agree. And the violent bounce was even more impressive because the day closed green and we had a couple of green days to follow up thereafter. It was amazing. So now we have those two lines to look at. One looks like it's becoming a battle zone. And the other one, God help us if we lose it. If we lose the 224 on a closing basis, we're probably going to close that gap down to 398 and go much lower. I'm not too depressed about it. It would be upsetting for those long everything, but I will be buying the dip because macroeconomic conditions are still too strong. That's why the Fed is pulling the plug, because everything is so strong. The inflation is here, not for any reason other than we have too much money floating in the economy. Period. End of story. The government spent way too much money trying to bail us out. They panicked. I mean, I'm not calling them evil or anything, but I think they did a little too much, and they're doing more. I just saw a headline about another 1.4 trillion. I mean, what happened to billions? Trillions is just way too much money. So anyway, we have a lot of money into the system, and they need to burn it off, and it's going to take a long time. So I think the Fed, my guess, Wednesday, they meet Tuesday and Wednesday they will come out and tell us what they decided. I'm going to give you a little hint. I could be wrong. I'm not an expert on Wall Street, but I'm using logic here. So the last two meetings where he had a decision to make, not the last two meetings, the last meeting and some meeting before that, I think 2 or 3 meetings before that, where he needed to announce something. Like the first one was the taper. When will he taper? So the one time he needed to announce the taper, won't he? He came out and didn't announce it. He comes out with the official statement. It said, it's not about the taper today. We're monitoring conditions. We'll act when appropriate. But then in the question and answer session, somebody asked him, will you taper? We're not here to talk about that, but it's going to end next year, middle of the year, which is this year. So basically, you're going to start in November. Mathematically, you can't do it otherwise. So he announced the taper without announcing the taper. Same last meeting. When will you raise rates? We're not here to talk about that. We will act when we see appropriate. And then in the question and answer session, they asked him, and he said, we expect to do it in March. So he made policy in the question and answer session. So it's a habit. So here's my guess. This week, he will raise a quarter like everybody expects him to. And then he will say, we're not here to talk about the next one. We will act as appropriate. And somebody's going to ask him in the question and answer session, when do you think you're going to raise it next? We're not here to talk about that, but we expect to revisit it in June or July. And if he says that, I think the market will rally in relief. So I'm bearish into Wednesday, bullish out of Wednesday. So we'll see if that pans out. It's a gamble, but that's how it is. So fundamentally, companies are doing great. If you look at Amazon, my God, I mean, the P&L is amazing. Everybody, including PayPal, Roblox, all of these stocks that cannot stop falling. They have just amazing fundamentals right now, but there's no risk appetite. You remember the when Uber and Lyft came to market, what do they call them? Unicorns. They call them unicorns because they made a lot of money, but they spent a lot of money. And then they said, no more, we want none of these stocks. And they sold them down to hell. That's what's going on right now. They have no appetite for companies that lose money. So this is the time to start picking some of those companies up, like Palantir, Pinterest, ones that have actual proven businesses that just cannot stop falling. Do you know what first stock I saw turn around on the big bounce from the correction? You're going to laugh at this. I was looking at a bloody day on 224. It was as bloody as it gets. Everything's red. The first stock that turned green, Clover. A $2 stock turned green. I was like, this is it. That's the bottom. Clover rallied 15, 20% that day, whatever it was, and never looked back. So Clover, the leader, follow Clover. It was thanks to, what's her name? Clinton, the daughter. I forgot, Chelsea. Because apparently Chelsea invested in Clover. Forget the fact that a billionaire is backing it, because Chelsea Clinton followed Clover. Hey, Clover must be a good investment. It took off. So anyway, think outside the box. But hopefully I'll give you a few things to look for and incorporate in your trading habits. And maybe you can come out of this smarter than the average bear out there.
That's awesome, Nick. And so within this context of basically a lot of news catalysts in the market, Fed decisions affecting the market, how could our users utilize options specifically to structure their trades, to maybe take advantage of some day trading opportunities and protect their downside for their swing trades or their longer term positions?
Okay, so I'll start backwards. I'll tell you how I can throw a blanket protection. So when I say I want to protect my portfolio, I don't want insurance 1-for-1. If that's the case, I shouldn't be in the market. That's just too much risk. If I'm worried about my entire portfolio, I shouldn't be invested. But if I want to buy myself some time, I usually want to protect the holy crap moment. So picture back on 224 and 124 bad days. Picture how much your portfolio was down in dollars. You must have a value in your head. Let's say it's 5,000. I'm making this number up. Okay, so how much of that next time you want to have of offset for that? So then this gives you some sort of a tangible number you're trying to protect. And how much of that do you want to protect? Like, do you want to protect all 5,000? It might get too expensive. How about 20% of that? So you take a position that if the same drop happens, you would get that kind of cash to offset some of the losses. So the easiest way to do it is the most expensive way, which I wouldn't do. The easiest way to do it now, the VIX is 30 something. I don't buy VIX calls. Otherwise, if the VIX is depressed, really low, I would just buy VIX calls 2 months out. Don't worry about how much it costs. Believe me, it'll make a difference if the you-know-what hits the fan. The VIX will explode. You'll make your money. Meanwhile, they'll bleed a little bit. And insurance losing money is totally okay. That is its job. When you buy insurance on your car and you don't crash your car, you don't say, gosh, dang it, I wasted my premium. No, otherwise you would have broken your car. Its job is to die with you not having to need to file a claim, right? So the second easiest way is to buy puts, and the puts in options, they're very simple contracts. You buy a put and if stock price goes through it, that put gets so expensive, and then you can sell the put itself for profit. Or if you want to protect a specific stock, you buy puts in that stock, and then you can guarantee yourself an out. For example, if all your money is in Apple and you want to protect yourself on Apple, you buy an Apple put, period of time, certain level. You say, I'm okay taking a beating to 145, but below 145, I will be out. Somebody will sell you that guarantee or a fee. Then you can go on vacation knowing that your stock you'll be out of your stock at 145 if you choose it. It's not automatic. So you hold, like if you file a claim, if you have a fender bender, you don't have to file a claim. The insurance company can't force you to file a claim. Same here. You buy a put, you don't have to use it. You can keep your stock. Okay, so the second easiest way is to buy puts, but it's too expensive. So a variation of that would be to buy a put spread, and I can show you a visual. So I buy a put, it costs me whatever, I sell a put below it, and now I have a spread. So if price goes through both, I get a certain dollar amount guaranteed if it stays below it. So usually that spread, I pick $10 wide. I'll show you a visual in a little bit. And so if I spend $300, I expect to get $700 in return if price falls through and stays. So that gives me a tangible number. So how many of these contracts do I need? 2? That gives me $1,400 in theory. That's good enough chunk of that 5,000 I was mentioning. So maybe I only need 2. So $600 investment. And I can change my mind 2-3 days from now, a week from now, and I can sell it back out for partial gains or losses. So it might be a little more than 600, a little less than 600. Who cares? It was insurance for the period of time. I needed it. I got it. It lost me some money. Big deal. So people are crippled about that. I promise you, I put out the note in November and people reach out to me on January 24th. How can I buy insurance? You can go back in time and do it when I told you to, or wait for a bounce, because right now the house is on fire and nobody's going to sell you insurance for cheap. You're going to pay up for it. But if you really need it, you must get it anyway. And here's the method I said then. It's still effective now, but it's a lot more expensive.
It always kills me, Nick. I'm so glad we have everyone watching here and now, because when I talk to people on the phone and they're like, Jonathan, how can you help me? I just lost 120 grand in the past 3 months. I'm like, get into a time machine, man.
Yeah.
And
so, it's human nature. It's not like they're idiots or anything. We're all like this. That's our human nature. So I'll give you one really good person. He's a member, and he's probably going to throw in the white flag and quit because he's not able to emotionally get over the hurdle. So that person, super nice guy, smart as heck, but emotionally involved to where blinders are on and he cannot get out of his mind to do the right thing. So I'll give you a scenario. He sold puts in stock X, not the X stock, stocks XYZ, whatever stock it was. I'm not going to name it just in case he's listening. Good, huge position, a lot of money. He sold puts. Too aggressive. I wouldn't have sold the same puts. Selling puts is you commit long. if you don't know what that is. And you must buy shares at a certain level. Let's say it's $100. It was way more than 100, but let's just say that. So then the stock collapsed way below that. So he comes to me, oh my God, I'm in trouble. It's like, why are you in trouble? You said you wanted to buy the shares at that price. Why don't you just buy the shares? No, I don't want to buy the shares now. Okay, then maybe you'll get a bounce. Sure enough, we got a bounce. I reached out to him specifically. I said, that's the bounce, ABC. That's the C. When you get a bounce that gets you out of trouble, you close it. It not only got him out of trouble, he had big gains because price shot. You know, that violent reaction on 224 was extremely violent. I said, that's your out. Guess what he didn't do? He didn't get out. And guess where the stock was? It fell right back down to the low it was before, and he was in a bigger, actually lower. So he not one share that he said buy back, not one contract he bought back. So it's hard. But if there's somebody there reminding you, you're more likely to do it. And we trade in a group, which makes us better because we have more eyeballs watching. There are a few people in my group that are amazing. It's like, how many monitors do you have? Because they're all over it. Nick, watch out. The SPY 1 minute harmonic pattern. Let me check. Oh yeah, that's right. Okay, so that's how we set it up. So, and they're scanning everything. And so we have a huge watch list from that perspective. Plus, if you're sharing your ideas with other people, you're more likely to be lax with them. So you will make them bulletproof. Like if I know I'm sharing a trade for myself, maybe I'll cut corners in my research and method. But if I know I'm sharing it with somebody that may get in trouble because of that, I'm more accountable to it. And it makes me a better trader for sharing the idea. And a lot of people share the idea. Like somebody on Friday says, okay, I'm selling puts in so-and-so for such week at such level, I'm collecting this much. So they're putting their trades out there. And when you put your trade out there, they don't have to, they're offering. It makes them think 3 times before they post it because we're judging, right? We're watching. So there are no jerks. So find yourself a good cohesive group. My group is hundreds and not one jerk, I promise. I had a couple of instances where I had debates with one. I actually had somebody quit on Friday because of that call on the SPY. They didn't like the tool I used and they have a mental block against it. And super nice guy, super smart guy, was a broker himself and just decided to quit. Because he couldn't stand that I referenced. In fact, I didn't reference the tool, but he knew what I was talking about. And he decided he'd had enough and he left. It's fine. I will bring him back if he wants to. So find yourself a good group. We have a good group. We're growing tools. We just adopted a new tool. This guy, Trady Ticks, look at the things it does. I'm stuck in one corner, this corner right here, and maybe this corner. And that corner, and that's it. I haven't even gotten to any of these, what it does and what it doesn't do. But this one has been money. This page right here, short term, has been amazingly accurate. So we're testing the heck out of it to see if it works out. And I got the gang discount if they wanted. But anyway, that's a different conversation. So I'm still a baby. I'm learning it. And once I get bulletproof on it, I'll put out how we can use it. And I am using it for the groups, I'll say. Awesome. Tools are important. You guys have an amazing tool with the Benzinga Pro. It's always open on my desk here somewhere. There it is. So the chat room, they're here all the time, weekend or not weekend, they're here. And some of them are here and in the live trading room, which they'll be watching my screen. I just shared the Sunday video, which had a little under 100 tickers today because I went over a few things that are teaching moments. So this video is probably an hour and 45 minutes long, and it comes with this spreadsheet that is with notes, and they can click on these. So research galore, opportunities, like I draw the path that I think can happen. Like, what is this? Costco, okay. Costco is in the middle of the range. It might swoon into Wednesday, but somewhere in here lies a buy the dip opportunity into the support zone, and then maybe it can do this into Friday or Monday. So that is the trading opportunity. Long-term, Costco is beyond reproach. You just have to do your homework to see how you can trade it. And then I suggested that I would do a credit put spread, for example. So these are alphabetical. These are tickers that they asked for. So it's not like I descend on, hey, these are the tickers you need to watch. No, this is the ticker that comes as a request. Later tonight, I will have the strategy for the week, and then we'll trade one day at a time, morning notes, afternoon notes, full write-ups with videos. Usually I do iron condors, but I'm skipping them these weeks because the weeks are too violent. And I know there are a lot of newbies in there. They're trying to learn iron condors using the 30 VIX. That's just not smart to do right now to learn. So active, very busy for everybody. So you need to have a method. So if you want, we can go there now, unless you have something else on you to do.
No, that sounds great. Let's go into your method, and then maybe we could hit a couple favorite tickers after that.
Yep. So I made just 3 pages. Don't get too scared. A little slideshow. So the idea is to develop pro-like habits. Whether you're a pro or not, doesn't matter. But if you have habits that pros use, and some pros don't even have those. So you'll be, basically, I'm asking you to level up your game. So you need to train yourself to be more consistent. And to be more consistent, the only way you can be consistent is if you're simple in your method and you actually have a method. Otherwise, how can you repeat it? Like every pro everything that is good at anything has a specific way of doing things. They don't wing it. So if you're still winging it, I don't know if you're going to be successful in the long term, unless you're super lucky. So first, you need to have a method that gives you the confidence, but you also need the discipline to stick to your method. Sometimes I'm tempted to take shortcuts, and sometimes I do, and more often than not, I regret it. If you can skip those shortcuts, that would be great. So ice cream man. So risk is the first step. So when you simplify everything, you have to bring it down to, when you take a risk, what's your first thing? You want to know a few things about the risk you're taking. You can't take shortcuts on that step right there. And most people just don't even think about that step. They just jump in. So I'll tell you how I think about risk. So I break it down into 2 components. Most everybody here knows the one component. Maybe 2 or 3 of you know the other one and mention it, but nobody is going to put the 2 together. And I'll tell you what they are actually. First, how much risk am I taking? Everybody knows that one. Okay, how much money can I lose? That's the consequence. How much can I lose? If I get it wrong, or if I'm super unlucky, what can happen to me? That's number 1. The second one is the risk position in options that make sense. But what it is what are my odds? Okay, so it's all good and dandy to know that I can lose that much and I'm okay with it. But what are my odds? So this part right here, is, I don't manage this part. I decide, okay, I'm going to risk $1,000 or whatever it is, and then I move on from it. I don't add to my risk. There's a slight variation. I'll get to it in a second. But once you decide on how much you want to lose, that's not the part you manage. That's a decision you make and you move on. This is the part you manage. What are my odds? Because your odds change with time. Facts change, circumstances change, chart level change, and that changes your chances. Luckily, with options, that guy is given to us with a number. You can read it every minute of every day. So even if you don't use options to trade, use options to read your odds on equity trading. What? I'll show you what I mean. So this is the part you manage. So you need to know what to trade, have a watch list, don't willy-nilly. Where to trade it, those are the odds. In options, it makes sense, that statement. And when to trade it, like, be specific. Why are you trading this stock now? If you don't have a reason why, don't do it. And for Pete's sake, manage the odds. You have to revisit your odds. Let's say you did your homework on Apple and you found out something about Apple that nobody else knows. Maybe you know that the operating system for the car is going to be released soon. It's going to be fantastic. It's going to bring all this kind of income for Apple. Nobody's looking at that. And you take a position based on that thesis. Nobody can take that away from you. That is, you did your homework, you have your belief, you gave yourself chances, odds, whatever it is, you gave yourself a number in your head. And then 6 months later, you revisit that, and it looks like, no, they're not going that way. They're going by way of making a car. And then you think to yourself, oh, geez, making a car, they can't even make headphones in time. How can they produce a whole car? I don't think I like this. Now your chances have dropped in your head. So you manage your position to get out based on that. I'm just using fictitious thing. Don't get upset if you like Apple. I'm just saying. So this is the definition of risk. Now, I said you make a decision on this one and you move on. Slight variation. So in this environment where headlines are everywhere, so let's say you decide to take $1,000 risk on whatever trade you're doing, I urge you to take half of it and leave another half to add. I'm doing this with crypto right now. I did a video about 2 months about crypto. My strategy was I saw a correction coming in Bitcoin. And Bitcoin, however Bitcoin goes, all the other coins follow. So I said, if Bitcoin falls below the neckline, it's going to go to 33 first, bounce, try to recover the neckline, and then come back if it can't. And it probably will lose 33 and go to like 28, 29. So I said, I want to add one chunk of coins at 33, and I did. And then it bounced. I got 30 or 40% wins. I didn't book them because that was my plan. And then I will add another third at 28, 29, and I will add the rest somewhere around 22. Yes, there's an opportunity to go to 22. Maybe it does, maybe it doesn't. If it doesn't, I'm long already. If it does, I'm long with a full size position without adding to my risk. I have averaged in, not down. So I decided on the risk size. I didn't take it. I took this much, and then this much, and then this much. So I didn't add. I broke it up. Average in, not down. So that's risk. So what about the habits? So there are no shortcuts. I promise. There's no magic bullet out there. So leave as little to chance as possible. Homework, I do it every day, all day. There's no, if you don't know how to do it, join a group and ask. Like the people in my group ask me once a week, but they're pretty good themselves. They're probably just getting a second opinion. So ask. Homework, you can't get around it. Set alerts. You'll see my charts have orange dotted lines. I have like 1 million alerts go off every day. On bad days, my computer screen is like a Christmas tree. You know, beep, 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 beep. Alerts everywhere. And then this acronym, this is basically a stupid little acronym that tells you don't take a trade unless you know what you're doing, for what reason. So this is no trigger, no trade, or no thesis, no trade. So you're either trading a chart trigger, you know, breakout, breakdown, or a thesis, you know, that Apple thesis. If you did homework and you found out that they're doing an operating system for cars, I'm making this stuff up. I don't know if they are. Then that's a thesis. Okay. So if you don't have a thesis or a trigger, and by the way, I thought it was going to go up, or I thought it was going to go down. That's not a thesis. That's gut feeling, hope, not tradable. Okay. So what about when the trades are set? Always have an idea of how your odds have changed. You take the trade, you think you have the upper hand against your opponent. And yes, there is the other side of the trade. So over time, you say, you know what, now I'm like, we're even keel. I don't even know if I like my trade because of my reasons are gone or whatever. And then you manage that odds realistically. So be honest with yourself. My buddy who sold the puts wasn't honest with himself and didn't listen to the voice of reason, even though I sought him specifically and said, this is your out. No answer. So I knew he wasn't going to do it. And stop out. Sometimes the stop out is good or bad. So this Friday, I told you I bought puts in the morning. I got a huge drop. I stopped out by selling puts against them, which is basically locking my profits and capping my wins. And I did the right thing. It turned out to be a perfect thing to do. But even if it wasn't, let's say price kept on falling, I did the right thing. And same as I would if I lost X%. So when I took the trade, I said, I'm willing to lose half my money on this trade. It was a fast trade. It was directional. I said, I'm willing to lose half my money. And luckily, I didn't have to make that decision. But had my premium dropped in half, I would have gotten out. Set a thing that will get you out of the trade, good or bad. So you can stop out at X% or X dollars, or if the stock or whatever you're trading hits a certain level. Let's say I had a target and it hit that target, I'm out. Let's say I said, okay, I'm going long into support, and then support fails. I was wrong. What are you staying? What are you staying for? You get out. So lock and book profits. There's no shortcut. All right, so some do's and don'ts. Have balance. I just mentioned a couple of bearish trades. I don't have to all be bull. Whenever I have a lot of bullish trades, I sell a call spread, which is a bearish trade on the whole index. So this way, every day I've got something balancing myself out. Have balance. Don't all be in the same type of trade. So don't have a firm, Clover, Palantir, and PayPal in your portfolio and nothing else, because they're all moving the same way. So if you have those, why don't you take some QQQ, which they say there's rotation between the two. I haven't seen that in a while, but they say that it's there. At least you're trying to be balanced or diversified a little bit. Have some oil if you don't, not now. I'm short oil, but anyway. So have some balance. Don't be all, spread the risk when you can. By spreading the risk, I don't mean taking an actual spread, although that would be a fantastic way of doing it. But I spread my risk of coins. I bought some coins. I will buy some coins. I will buy some more coins. So I didn't just all in one time. That's it. I'm so perfect. I cannot be wrong. Dump it all in. Although if I had done that, I would have gotten a pretty good pop. But anyway, that wasn't the plan. I have a plan and I'm sticking to it. Okay, so spread the risk when you can and average in. We already talked about it, not down. Common sources of problem, and these are the don'ts. Okay, so don't average down. Those two go hand in hand. I can't say it enough. People can't, they're all in. And I'm going to add, why are you adding? Do you know anything new? No. So why are you adding? To bring my price down. But you're making your problem bigger. Why would you want to do that now? If you don't know anything new, why are you doing it now? And don't hope. My buddy hoped. He hoped that the rally would continue. He was greedy. He got reprieve. He not only got even, he got green, and he still wouldn't take his risk off. That's way too much hope. He needs to work on his attitude, like the sentiment, and redefine the trades when needed. Like in his shoes, I'm carrying that, not to beat that horse, but I'm carrying that because that's a common problem. I take a long or position, it goes against me, and then I get a relief and I don't act on it. Had I redefined the trade to where, okay, I just want to get even or as close to even as possible, and then the bounce gets me to even, thank you, I'm out. I do that. And sometimes I didn't need to get out and the stock continues in my favor. And I look back and was like, but I did the right thing. And the next time I would do the right thing again, even though it wasn't perfect. So if you redefine the trade, okay, I'm no longer trying to make money here. I just want to get out even or with as little damage. So the pop, okay, thank you. I've recovered most of my losses. I'm down 5-10%. I'm out. Not a bad decision. So on ABCs, add protection, book faster, close problems. The ABCs, CBAs, ABCs. I hadn't named them ABCs then. They were still 1 through 3. So now they're ABCs. Okay, so that's it. So just to recap, you need a method. You need it to be simple, and you need it to be repetitive, and you need to hold yourself accountable. That's the whole thing. Don't take trades without specific reason. Don't take trades where you don't know the risks. So shorting stocks, no. Shorting stocks the traditional way, you break the first rule of taking a risk. You don't know how much you're risking. But I can put a stop. No, maybe you can, maybe you can't. Tell that to the GME shorts. They did not survive. Or the Tilray shorts. What? Tilray? Yes, Tilray is the original super spiker. It wasn't GME that invented the method. Check this bad boy out. Look at this. It went from whatever, $5 to 300. And that day, it was so violent. I sold puts, which is a bullish position, at $40. So here, and I couldn't close them. I needed to buy the puts back. They were pennies, and I couldn't close it. That's how high the implied volatility was. So, it was just insane. So somebody that shorted that stock on that day blew up. Same with GME. So stop losses did not work, guaranteed. So shorting outright is opening yourself up to literally unlimited risk. Therefore, it should never be done. The options provide ways to short with just a finite amount of money, and that's the best way to do it. So if you want, tell me if you want to break out now to do some charts and then options.
Yeah, I think, sorry, I'm just popping over to Zoom here because, all right, cool. I'm just getting a lot of questions in the chat about your trading room and everything. So I want to save most of that for the end, but I just threw a couple links into the chat because you do have access to Nick's trading 8 to 9 hours a day, plus his weekend strategy sessions, plus all of his charts on over 100 companies, and swing trading analysis videos about once a day with full breakdowns of different swing trades that you can do. So today only, normally it costs almost $3,400 to join Nick's program, and that includes full access to Benzinga Pro as well with a bunch of other tools. Today only, I've got 15 laptops available. And so not only are we going to give you about 62% off of the program, but we'll also throw in a free laptop. So it's about $1,300, $1,297 for the whole year. That's literally less than we just sell Benzinga Pro for. It's a crazy deal. We only have 15 laptops available. So I'll get more to all the details about that, but right now I would just tell you there's a 7-day money back guarantee. Use the links I threw into the chat, and then I also put my direct contact info if you guys have any questions. So, but that being said, let's dig into some specific companies for the upcoming week. I see Melissa in the chat. What would you do with Beyond Burger? She's asking.
I would not eat it. I would prefer the Impossible Burger. I tasted Beyond, and I had the sense of vitamins, and then I tasted the Impossible Burger, bought it at Costco. I was like, that's not too bad at all. So it's not like I'm a meat connoisseur or anything. I would eat whatever. So here's the thing with Beyond. So now the price is where it's never been before. So what happens with that dynamic? The bulls lose all kinds of sense of they lose reference points. So they're the opposite of being in open air. There's nothing here they can lean on. Okay, so the bears have all the advantages. So what happens in that, I call it optics mode. So optics rallies are sold systemically. So if we were, I don't remember doing drawings on this one. So if you imagine a channel, I'm not trying to connect the dots here like this. The behavior, rally, sold, rally, sold, rally, sold, rally, sold. So if you're getting long here, you're not listening to what the market's telling you. Stop getting long here, get long here, get out, get long, get out. And when does that end? It's like a riptide. The best way to do it, either with a headline, which is not ideal, or swim sideways. Have it go sideways, quote, consolidate, like they did here. See, they tried to go sideways, and then the market fell apart and tripped them. So if you want to see a visual of that, you can look at PayPal, a fantastic company that cannot find footing. My goodness. And Affirm. I know I've drawn it in Affirm. Okay, look. Rally sold. This is optics mode. They almost did it here, and some idiot released the earnings the wrong way on the day. The other idiot opened his big mouth in the Fed and just ruined it. And now they're trying again sideways. And then on Friday, for some reason, they fell apart, whatever, 10, 12% out of the blue. So great company for the future, but now it doesn't have a reference point. So for Beyond Meat, you would do homework and see if you want to invest in the company. The P&L is still growing, so it's attractive. It's not expensive from a price to sales perspective, but it loses money. So there's no risk appetite. Nobody wants to buy anything that doesn't make money. But look at the P&L. It's pretty consistent. They still lose a lot of money, so they get no kudos on Wall Street. And the important part is that if they can get that number positive, the cash from their own operation, then the investors will give them a little bit more credit. As it is right now, they need to borrow. That's why that financing number is high to do whatever. So if you need to borrow to do whatever, then suddenly the banker is on your board table. Yeah, you can't do this. No, you can't do that. So you can't bank on it big time. If I'm long, I don't add. If I want to get long, I should know that it's a speculative opportunity. So I kept the earnings. That's from Benzinga, by the way, the earnings report. So the losses were big, and the sales were a decrease over last year. That's a concern to me. I usually give companies a pass, but when you mess up on sales and you're supposed to be a growth company, I start to get nervous. Now, technically, this green line suggests that there should be a rally towards 100 sometime soon, which in this case sounds like it needs a headline of sorts. This is where I go into the internals, and the RSI is improving. Price is falling. The RSI is not. It bottomed in December, made higher lows since then. A couple of versions of it. So it kind of tells you there's a divergence between the internals of the stock and the actual stock price. So if you want a speculative long, I don't mind it. But what I would suggest is to take it partial. If you decide to risk 1,000, risk 500, and set a stop. If I lose X, I'm out. And see what happens. So maybe on Tuesday, think about it. And the options offers you a way of doing it. So let's jump into the option. I'll give you an idea how I would do it, knowing options. And if I wanted to own shares, that's a big if, okay? If I want to own shares of Beyond Meat. This is a practice account with E-Trade. I am not recommending it. It is an option. This is an options table chain for Beyond Meat. It's up here, Beyond Meat. So if you don't know anything about options, just know that they are contracts between a buyer and a seller. Some are called calls, some are called puts. I'm going to just talk about the puts right now. So the contracts usually have terms. One of the terms is time, like when you buy insurance. I'm buying a 6 months policy. In this case, I would buy an April policy, and it's 32 days on the clock. I just chose it randomly. In fact, let's go to May. So it has 68 days on the clock. So let's say I wanted to buy, Melissa, was it? Let's say Melissa wanted to buy shares of of Beyond Meat. They were $38 on Friday. Well, if Melissa was willing to buy it at 38, why not, instead of buying it? That's a big if. Instead of buying it, she collects money to promise to buy it lower. So basically, she's getting long Beyond Meat, but leaving room for error. I'll put a visual to it. This side is called puts. The second term of a contract, other than time, 68 days, is price. So Melissa's saying, I would love to own it, but you know what? I wish I could own it closer to 30. No problem. How about 25, Melissa? So if I was Melissa, I would sell in May $25 put. This one. And the third term is one contract represents 100 shares, and that's true for all of these. 100 shares, one contract. So this puts me on the hot seat to own this stock at $25. So that's the deal, owning this stock at $25. And for this, I collect money. This money goes into my account. It's $165. So somebody right now will pay me $165 to please buy their shares at $25 in the next 68 days. Me, Melissa, wanting to own the shares now, will gladly buy them at 25 instead of now. So what happens is, let's say the stock falls to 25. So this put position will show a lot of losses on paper. So you do not have to realize those losses if you don't change your mind. So if Melissa doesn't waffle, and one day she wakes up owning 100 shares, she would have paid $25. Her break-even point would be $1.60 below that. So she wouldn't lose money after she gets assigned actual until if she sells the stock below 23.40, 23.35, whatever it is, that number. So meanwhile, the stock fell a lot, and she didn't participate in that because she said, I will buy it, but not until 25. So that's how this selling a put would be a way to get long a stock in an iffy market condition with a little bit of money and a lot of bit of buffer. So on the chart, Melissa wouldn't be long the stock until here and wouldn't start losing money until here. That's a pretty good condition to be in. So that's the kind of risk I like to take. The only problem is that's the only money I can make. So here is the twofold aspect of the approach. One, I sell puts when everybody's crazy. The VIX is high. The puts are hot. The implied volatility is higher than normal. So basically, all the prices here are inflated because everybody's on edge. And if we get a rally, say on Wednesday, I can add another aspect to it by buying some calls and call spreads that would give me upside participation. So let's say I wanted to own 200 shares. I would sell one put and buy one call. So in that case, if I sold the 25 put, I collect $164. If I buy the $40 call, I pay $540. So now I'm only out the difference between the two, the net of the two. And that would make me really long and would participate in upside. So this would be the visual of that position. Nope. That. And one of each, that's 200 shares worth of being long. So I would sell this, money comes into my pocket. I would buy this, money goes out of my pocket. The net effect would be $370, $380. I'm long 200 shares if I want to. So worst case scenario, I'm only long 100 shares at 25 and it didn't cost me much. Best case scenario, the stock rallies and I'm really long for really cheap. And I'm making money for as long as the stock is rallying. So this would be an approach I would do with Beyond Meat, because I don't have a lot of faith in the company now, but at 25, yeah, I can muster up the courage to own 100 shares. So I'd be a seller. So of that put, which is a bullish position. So this is a jump into the deep end on how to use puts. And please do not treat this as a trade alert, because that's not a good first trade for somebody that doesn't know options. Selling puts when the market is teetering on a crash comes with consequences, because you are on the hook to buy shares. But in this case, if you only do one, the worst case scenario is you end up just buying shares at 25. So if you can live with that risk, that's the worst case scenario for this particular trade. I would never sell a put that I didn't intend to own shares in, because I had somebody on Friday say, I sold the put in Tesla and I cannot afford to own shares. And it was expiring on Friday. And I'm thinking to myself, okay, so don't do that again, because that is not a good situation to be in. And it turns out that he was profitable $600 and he didn't know it. It was a happy message. He sold the Tesla put. Instead of collecting $164, he collected $900 days ago. And during Friday, when the price was right there at his strike price, so he thought he was in trouble. I can't remember what his strike price was, 805 or 810. So I said, it's $300 to close the trade. How much did you collect? He goes, 900. I was like, what are you waiting for? Close it. He goes, it's $300. I said, you just made $600. Who cares about the $300? You want to be buying 100 shares of Tesla on Monday morning? No, close it. So he didn't know what he had. Bullet. He goes, well, that's an easy decision. I was like, yes, you collected $900, but he shouldn't have sold the trade, because he didn't really understand the repercussions. Well, now he does. So now he's gotten the lesson in the frying pan. And luckily, it was a win. So he collected $900 when he sold it. Time has passed, and there were only a few hours left, and the price was right there before the market took a tumble. And boom, $300, and he closed it. Had he not closed it, he would have been down thousands. So a couple of hours made a difference. Him being in the live trading room saved them thousands, because he said, what do I do with this, Nick? I said, give me your parameters. Oh, and then I yelled at him basically, excitedly, why wouldn't you close it like right now? It's 298. By the time he did it, it was like 305 or 310. No big deal. It was a win. Even if it was a slight loss, I would have told him, close it. You're risking too much. Reopen it weeks from now, much lower. You would have the same opportunity. Again, just give yourself more time. Don't be up against the clock. So this is, you need to know whether you're trading or investing. So Melissa sounds like she's an investor. That's why I like the trade I set up from an investor's perspective. And because you want to be long, you want to leave a little room. You want to participate on the upside, but not all in. Perfect. So that was a good question. Another one.
Awesome. Well, really quick here, I wanted to welcome Miguel. You are locked in for the next year, and you'll be getting your laptop. That'll be shipped out in about 7 days. And Mel, welcome, and Andrew. So awesome. Glad to have you guys on board. And so there's 12 of those laptops left.
That's awesome. So you three pop into the chat room and say hi, and I'll ping you back and tell you what to look for like in the next couple hours. I posted the video in the chat room. You can go see it later on tonight. As soon as I'm done with this, I'm going to do another video, strategy video for the week. And it'll be like 10 minutes long, maybe. And then in the morning, I'll do the pre-open. The markets have opened. So I'm not looking at the market as if it's up or down. I didn't launch my futures. So anyway, welcome aboard. Let's do another ticker and give the folks a taste of what we do. And I promise you, there's no jargon. Did I speak Greek? I just did a whole trade. I didn't say one Greek thing in there, right?
Right.
Options.
Yeah, and for anyone who's a beginner, you don't know what an iron condor is, you don't know how to set up a credit put spread, that's okay. That's why a lot of people are here, learning how to trade with Nick so that you can preserve your account, so that in these very volatile times, you can make smart decisions and not risk more than what would be wise on an individual trade basis. We do have a couple good questions about general groups of stocks. We've got David in the chat wondering about China stocks in general. And then we also have Mountain Tactical asking about fuel cell companies such as ADN, future investment like deep in the money calls, he says.
Okay. What was the first one? China. So here's my problem with China. I like the fundamentals. Like Baba is crazy cheap, but the risk and NEO, I like the NEO opportunity, and it's crazy cheap. But the risk of delisting is real, and I have no idea what happens when you own options and delist. Besides, NEO also listed in the Hong Kong market. I think it started trading on Thursday or Friday. So they have alternatives. So other than the problem of the whole market, you have the problem of their particular stock falling, which is not that great. It's not a big deal. And then you have the political problem from the government. For NEO, it's not a big deal, but for Baba, it is. And JD, it is. For the other problem is, what if, and that is becoming less and less risky, less and less of a concern, what if China decides to do the thing that Russia is doing on the Taiwan front? I don't know enough about it. My neighbor is from Taiwan, and he jokes he was made in Taiwan. If you're old enough, you know what that means, because in the olden days, everything was made in Taiwan. So it is, I don't know what's going on there. So what if there is a struggle of sorts? So if Baba is rallying, my sentiment is that the US markets are rallying too. So why take on the junk that those companies bring as far as stock price action? Not the companies. The companies are fantastic. Alibaba, it's priced like a freaking bank, and it's a mega growth company. Look at this revenue line. Look at the sales, 4 billion to 50 billion. What? I mean, who does that? And if you go to the metrics, wait, that's not Baba, that's Tesla. I was like, that's too big. As soon as I said it, I was like, I don't remember it. That's pretty impressive though. Let me see here. Income statement, Baba, 12 billion to, okay, 12 to 130, 10 times, right? So, and look, 10 billion in net profit, 46 billion in, wow, gross profit. Statistically speaking, 25 PE, 2 times sales. So your neighborhood pizza shop, super busy, line out the door. You go up to that person and you say, I'd like to buy your store. How much do you make in a year? I do 300,000 in a year. I'll pay you 2 years and give me your store. He'll flip you off, punch you in the face, and kick you out the door. It's an insult. That's what this is. 2 years worth of sales, credit in the stock price right now. Way too cheap for a growth company, 10 times. That's way too cheap. But hostage to headlines. Talk about selling rallies, right? Rally. This is a weekly chart. So here's the thing. You see these blue lines and green lines. So these are harmonic patterns. I don't draw them. I pay for the service. Well, it's a paid service. It's super expensive. They're like self-fulfilling prophecies. They're not saying get long. They're saying somewhere here lies a super great entry point that brings BABA back to like 206. Somewhere here. So you have to find other ways that corroborate that theory. It hasn't worked for a while. It did work for a little bit. I was long BABA in its last spike and I got out that same day. I did my ABCs and I booked profits way early. I was like, okay, it's going into earnings. I don't know what the hell's going on. I got 40%. Thank you. I'm out. And then it tumbled thereafter. So I don't have great corroborating evidence from the RSI. So I need something else. I do have level corroboration because this was the actual base in 2016, December. What? 2016. So that's good. So now I have 1.5 things. And now if I can get something else. So I got a new tool that tells me algo flow and all of that. I don't know enough about it yet. I'm trying to get, I know 1 or 2 corners good. Well, I should say. So I'm waiting to delve into BABA and see if I can take a flyer on it. Same as Melissa wanted to do with Beyond. I wouldn't mind selling a put spread, not a put. I don't know if it's going to delist. I don't know what that means. A put spread, meaning finite risk, and buying a call spread for like 3 months. This will give me an opportunity to participate with a limited amount of money with good fat paycheck if it happens. If not, I risk a little. So that's the China stocks scenario. You can use a blanket statement using the FXI or KWeb. Okay, so the FXI, look, that's January 2016, almost there. KWeb, even the ARK, some of the ARK companies, ARK-K, I'm pretty sure it has a couple of Chinese companies in there. JD might be in there. Yeah. So pick the IWM. I bet you they're moving together. BABA and the IWM. Not even. So, you know, it's worth a risk. It's just, if I'm long, I don't add. That's a definite no. All right. So what's the other one? Fuel cell?
ADN. Yeah, specifically.
ADM?
N as in Nancy.
Okay. Advent Technologies. Oh, let me guess. A SPAC? Yeah. I'm not about anything that has no income. You know, you can trade it, but to invest in it, that you need to do homework. The charts are not going to help you much. This is a broken stock. You're going to have to do homework on the company. So meanwhile, it is tradable from a technical perspective, and it's probably a micro cap. It is. So be careful. 320 looks like a very pivotal point. You take out 320, maybe you get to 360. You lose this one, you're probably going to get down to 260, a good place to maybe nibble longs to see. All right, what else?
We've got BTU from Arlene.
Okay, I'm going to say it's high. Okay, so I shorted gold last week and it was perfect. I shorted other commodities. I can't remember what they are. Long week. I would fade this commodity rally because the whole premise of it is a particular situation in Ukraine. I'm not saying it's going to go away quickly. I'm just saying there's too much exuberance that got priced in. So in this case, 1950 was a technical trigger and they did test it. Look, failed, big bull, failed, breakout. They tested it 3 times. Look. So as long as they're above it, they can still make headway. So the technical target might be higher. One can argue here 2 things. You can either be tracing this breakout because that is a cup and handle right here, breakout from here. So are they tracing this breakout? They overdid it, right? So the second breakout would be, I'm eyeballing. The second breakout would be about here. So here's the question. How fast are you? Are you investing for the future? If you're investing, I wouldn't take longs. You're too late. If you're trading, there's plenty of trading to be done inside this crazy action, but you have to be a trader. Let me show you why. So this is a monthly chart of this particular company. So here's a company that fell apart. This is an important candle from April 2019. Isn't it older than this? I thought it was older than this. Did they delist and relist or something? 1883. Anyway, that's weird. So they fell apart in 2019 completely. They failed 1950, $20. They failed and now they're above it, but they're going into a prior big accident scene. So chances are everybody stuck here is going to take the opportunity to get out. They're doing their ABCs. That's the C part. Thank you. It took me 20 years, but I'm back even. Not 20 years. I'm just kidding. It took me a couple of years to get back to even. 3 years. I want to get out now. So I feel like I'm chasing. So if it's an investment, I would not let my mother do it. If it was my brother trading, I would tell him, okay, you can trade it. Let's talk about levels.
Talk about fatigue from bag holding. 20 years. Geez.
Well, it's not 20 years.
No,
I mean, it's 2019. It feels like 20 years, right? But if you waited 3 years, 4 years, it's an eternity. It's an eternity. But you can see it here on a weekly chart better. Look, you can see the fight right here, the base, this whole rally, then the fight, same level, and then the top. And they're approaching it. So 30. So how fast are you? It feels like this is like where that's the terminus. If not here, here. So how fast are you? There's plenty of trading to be done. Like I'll tell you, if they can take out 24, especially 24.4, they can get back to these. But that is a pretty tough candle right there. And if they lose this, they're coming back down to 18. This being 20. A number starting to ring bell, 20. So you lose 20, you get back to 18, if not 16. All right, what else?
Victoria's Secret, Doc got crushed on the calls after earnings. Do you think the market overreacted to the analysts or your guidance? Was thinking of getting calls for April or June.
What's the ticker? Vice?
VSCO.
VSCO. That tells you I have never looked at the chart before. Okay. Do they have... Okay, they have a business. It's fairly stable. I don't know what they said. It doesn't look like they're growing in sales. So I don't like the $50 mark. If you see it, it's been a pivotal zone for a long time. And it's above it. So as long as they're below 50, the bears have the advantage. They're going to try and do this. Better entry point would be about $2 lower than here. So if it dips this week, and if that person wants to take their bet on it, I wouldn't mind it. But going into 50, I would shy away from it. So how closer, like this is a good base, 44 and change. This is a better base. So if you lose this one, get out because you don't know where it's going lower. And if you look at it, the sellers are in charge. This is a 2-hour chart. So this is February 10th on. The sellers are in charge. So imagine when they get here, they're going to try to sell it. Picture a corridor and the sellers are having a field day inside of it. Maybe they snap out of it, but assume they don't. This way you don't get caught at the wrong place. So if you're buying it closer to here, then you're okay. You're in the middle, if not at the low end of the corridor. So, oh, I guess I have seen it before. Oh, okay. So support zone or lower. Check it out. Look right. This was my drawings from last December. I didn't even remember doing it. So I said resistance zone, they tried there. Resistance zone, they tried there. And then they came back down below everything. And eventually they lost the line I was worried about in December. And now it's going to be a problem. So they need to get back above 50 pronto. But there's a lot of resistance. These volume bars, that's a lot of action up here. It's overhead supply, Wall Street calls it. When they run into here, all these people are active. They're going to be trading it actively up here.
And I love how that's relevant from December.
Yeah, I mean,
you made those drawings in December. I
swear to God, I didn't remember doing this, and then the lines showed up. Like, well, there they are. I have discussed it before, and look, see those green M's? That's that harmonic tool I told you about. It said start looking for an entry point. Rising RSIs, falling price, divergence. Usually price is the idiot. And then price says, oh, okay, so I guess we can go higher. And then it hit both targets and then some. So technicals matter. Whether you believe in them or not, doesn't matter. They do work out. They're almost self-fulfilling prophecies. On Friday, I mean, last week, it was mind-boggling. The accuracy of these things that come up from the algo flow stuff. It's like machines know the stuff. And you see divergence and you make a trade on the minute to minute, the fast stuff. But it's fun to just discuss it, even though I can't trade it that fast because I'm doing all of this. But other people are, thanks, Nick, for the double or the triple. It's like, well, yeah, donate in the name of to your favorite charities. The American Heart Association gives them. So it is just people who are dead set against technicals. I think are missing out. You're purposely taking a very important tool out of your tool belt. You don't need to learn it. Just ask. I'll give you the lines. I'll give you the stuff. I do this all day, every day. Today, I did it for 2 hours. Every Sunday, webinar for 2 hours for all my people. Anybody can come. Today, a lot of people missed it because we sprang forward. All the overseas people didn't know. So I got Eddie from, I think he's in Germany. He goes, oh, I didn't know you sprang forward. I was like, well, I didn't know either. So I didn't know to remind you, but at least my clock woke me up in time.
Yeah, I have this wonderful alarm clock called Toddlers. They just kick me in the face. No. Speaking of overseas, though, we've got QCO here from India just asking about the Nifty stocks and just overall, if you had any thoughts on Indian stocks. And then 2 people brought up Roku as well, saying when there's no bottom, where does it go next?
Roku, what a heartbreaker. My God. It's one of those high flying stocks that is just like PayPal, like Square, like Palantir, Affirm, but those big ones, they have excellent P&Ls. Netflix, Facebook. There's going to be a rally like nothing else before. So Roku, the report I think was misconstrued. They were talking about risks from the shortage of components. And I didn't know. I always wondered, where the hell do they get their money? Who is paying Roku anything? I've got like 15 Roku sticks here somewhere. I didn't pay a dime for any of them. And I would never pay them for anything. Like, where are they getting their money? It turns out that they have an operating system that goes in most of the TVs that go out there. And I had no idea. But I know that they made money because it's right there in the P&L. So the concern is, the shortage of chips is going to be fewer opportunities to sell their operating system. And after the fact, fewer TVs sold also is a double banger that they can't have as many streamers watching their stuff, the throughput that they put out. And I'm saying, okay, but shouldn't you see that in the sales slowdown? There's no sales slowdown. They still grew 30, 40%, whatever they grew. But people are scared about it and they're just pulling the trigger out. I was like, but they make a profit. They're not like burning cash. And let me see here. They make 250 million in cash from other operations. So statistically speaking, they've become a compelling value. They even have a PE, for crying out loud. 5 times. This is cheaper than Apple. Apple is like 7 or 8 price to sales. That's pretty cheap. So Roku, if I'm long the stock, clearly I'm stuck long the stock and I don't do anything. If I'm looking to get long the stock, I will take a startup position. Perfect example. Let me show you the mind-boggling numbers that could exist with Roku. The Melissa style numbers. Melissa, you've become an icon. So let's switch to Roku. All right. So this is an options chain. Again, I can pick any month I want. I'm going to pick May because I'm consistent. Again, not a trade recommendation because I want to pick one that doesn't have earnings because we saw how people are reacting to earnings. This one is 68 days. So if I love Roku now and I wanted to engage long in Roku, would I also love to own it at 50 or 75? Heck yes. So let's see if we can make that happen. So how about 70? So somebody will pay me $340 today or Monday, to maybe more if the stock market is down. $340 today for me to buy their shares at $70. So me, the seller of the put, I am the insurance agent giving that person, Bob, the peace of mind knowing that Bob can sell his shares at $70 any point in time in the next 68 days. Any point in time, the stock can be here, the stock can be here. I have to buy it at 70. And yes, the price can be here, but Bob would be a complete idiot if he would let me do that. So I'm on the hook. I can't back out. Therefore, I never sell a put, unless I really mean to own the shares. The buyer is buying insurance. Me, I'm selling them insurance. Okay, we're both bullish. I want to own shares, just lower. He wants to keep his shares, but he wants insurance. So we're both like the stock. This is not a bearish position in any way, shape, or form. Both sides are bullish. So I want his shares. He wants to maybe sell me his shares if the you know what hits the fan. Symbiotic relationship. Happy, happy, happy. The third happy is the broker. Okay, so worst case scenario, Roku falls apart. I own the stock. What did I say? 70. I get put the stock. That's the term for waking up, owning shares at 70. And I break even at 72, a little bit lower. I'm totally okay. That's a level from the pandemic bottom. So when the world shut down for business, nobody was allowed to go anywhere, complete panic. That's the price Roku was at. Sales now are much bigger than then, I bet. I can't remember. Let's see. Sales now are 2.8. Yep, way bigger. Like way bigger. 100 billion, 1 billion bigger. What? So that's quite a bit improvement. They have 250 million in net income and the stock cannot find the bottom. So that would be a way to participate bullish without money out of pocket. This trade requires no money out of pocket. It requires less cash than buying shares now. If I wanted to buy 100 shares now, I have to pay 104 times 100. That's a pile of money. Instead, this trade would reserve an amount of cash appropriate per the judgment of the broker, and it's definitely less than the amount to buy 100 shares. So people say, oh, you're locking up margin. Well, it locks up way less margin than buying the shares. So how is that a problem? And so anyway, and that's one side of the trade. So the other, this does not give you upside participation. The upside participation comes from you adding some upside potential. So you would need to buy something upside, like buy a call spread. Buying a call is $1,500. That's pretty expensive. So you can spread it by doing a spread like this maybe. So you pay $1,500, you collect 1,000, and now the expense for this one is air math. What is that? $6. So $6, and I'm collecting $3.40. So the total should be 300 and something. Let's see. Yep, $250. So money out of pocket is $250 for this trade and gets me long Roku for 68 days. If the stock rallies, I'm making money right away with this. This $6 can turn into 15. This will die for maximum gains. So this 340 I collected would just die. The Bob would lose all his money on this one if the stock stays above 70. And whatever I sell this for, if above 250, I made money. So that would be a way to structure the Roku trade with the least amount of money out of pocket and moderate way of participating in the upside. Buying calls when the VIX is 30, you're overpaying. Everything is more expensive. If the VIX collapses, you're going to lose money on all of them. So buying calls on the day when Roku is down 6% helps because the calls have lost their mojo, but it's still expensive because everything is so expensive with the VIX at 30. The VIX, if you didn't know, is priced off of the options prices. So if the VIX is high, it means everything is high. Caterpillar, huh? Green. Lily and the TLT. Thank you, TLT. Made my day on Friday. Okay, next. What do you want to do? I'm your guy. I'm yours.
Thanks, Nick. Well, maybe two more here, and then we can get into more of how people can interact with you throughout the week. Evelyn has TQQQ. We've got MDB, a database company.
So MongoDB, do they have earnings? Do I remember that correctly, or they just reported earnings? Okay, just reported earnings. So they popped and dropped. Okay, down 6%. So Okay. I don't mind being long Mongo here. You have the opportunity to get back to 400 if the market complies. So if it dips on Monday and it fills the gap, I would buy the dip into this. In fact, I'm going to put an alert right here. I'm doing homework right now. Harm on dips. Those are notes for me. Don't worry about it. So the dip is interesting. And the thesis would be I'm buying into support. So why is that important? If it loses support, so if Mongo falls below to 274, out. I don't care. I'm out. I don't want to know how far down they go. Maybe they hold the year. Maybe, wow, what? The low was 270.13 in June of last year. The low was 272.5. That's pretty close. So that's a double bottom opportunity, but you lose that, it becomes a catalyst lower, like much lower. And look, pop, drop, pop, question mark. That is a lot of resistance up here. Lost necklines equal resistance zone. Yes. So it's not going to be easy popping through that, but I would buy the dip into support and stop out if it doesn't work. And how do I buy the dip? However you buy the dip. If you buy shares, you buy shares. If you buy calls, you buy calls, least favorite. If you buy call spreads, that's better. If you sell a put, favorite. Sell a put spread. If you can't buy the shares and you want some relative safety, put spread is good. Combination of those would work. That's Mongo. What's the other one? Drawing a blank. The other one. What's the other one? You said one before Mongo. I can't remember.
I've been on mute. Sorry. TQQQ.
Oh yeah. So that's the mega bullish QQQ. Warning about TQQQ. Not liquid in the sense where what quote you see may or it's not WYSIWYG, if you remember that from the 80s. What quote you see may or may not be real. And most definitely, I would not do a spread in TQQQ. I did a couple of credit spreads. It was a $1 wide spread and the quote was like $3. And like, that's mathematically impossible. And the platform locks up. It's just garbage. I'd rather do the QQQ. It's the same thing, only 3 times less fast. So if you insist on the QQQs, I mean the TQQQ, here are my lines on the QQQ, which are the same as yours. So when we popped, I drew this and I said, watch out, beware of the bounce and fade. When we popped, like we were still here, I said, beware, and I drew this. And then I said, look at this nice head and shoulders. You see it right there, those triangle houses. And that was my arrow for the target. We're not there yet. In fact, the problem, every freaking neckline we lost has triggered a downside that would trigger another neckline that has deeper downside. Let's follow it. 124, when we lost it, we triggered this downside, which would trigger the 224, which has way bigger downside. And sadly, this trigger has this downside, which triggered both of them. So worst case scenario, this is where we're going. What? So I'm not here to scare anybody. I'm here to give you a perspective that I'm agnostic. I want the stock market to do well, but these are the lines we were just looking at. That's the head and shoulders that we did not need to lose, and we lost on January 24th. That triggered the first arrow down, this one, which triggered the 224, which is got terminal velocity here, which is the base for November 2020 rally. I think we will find support here somewhere. I mean, this is good support, this is good support, but I have to respect it. So far, the bears have all the tailwinds, and I have to be realistic. So everything I said here translates back into the TQQQ. So let's put perspective. Look, so pop, sold, pop, sold, pop, sold, pop, sold, pop, getting sold. I'm going to change tickers, TQQQ. No lines on that. Some lines. Same deal. They're selling pops. So how do you snap out of it? You make a bottom first. They tried it here. It failed. They're trying it here. So If it goes below 40.5, it's going to like 32. Going to here. Same, plain and simple. If this week they lose the 224 low, they're going down to here. Simple. And when they bounce, they have a lot of resistance into 53. Get out. Anything above 52, I would get out. Anything above 50, I would consider getting out. So ABCs, B, book profits fast. So they did one of these like inverted ascending scallops here. I said they tend to repeat. Guess what? It didn't repeat. That one did not repeat.
And that's what I love about being in your room, Nick, just the sheer number of charts that you go through on a weekly basis, and learning how the computers are buying and selling. So for all the new people in here, those arrows are so important, you know, being able to tell, okay, if this is lost, then the computers are going to sell it down to the next level, which is a ratio. And it's not, I mean, once you realize that it's there, it's obvious. But for those of us who, you know, didn't know that before learning from you, it's truly groundbreaking.
So every day, these are the charts you look at live every day. I have 4 tabs like these. This is the S&P, QQQ, IWM, SPX, VXX, Fear, and on Friday I watched the TLT. But usually I have the RUT here, and then I have Apple, Google, and whatever. I have all the tickers, Lucid, and all the tickers that people are watching. So in the morning, I will send you a picture of this with all the pertinent lines, and then I'll add to them throughout the day. So you'll have a roadmap. You know, this was an important spot, and look where they failed. They popped into it on Friday, and I said, don't be chasing the morning pop. And, ooh. And then at 8:05 my time, which is, no, 7:50, anyway, way early in the morning, I sent out a note saying, I'm buying puts. And then this happened. So now it's important. So we had a gap above and a gap below, and it looks like they might fill the gap on Monday. I don't know where the futures are right now. So wherever they are, it is, we have a map. We know, like you said, it's, I can't see the future, but I sure know what matters. So intraday, I will steer you as right as I can. So check it out. Warning today. That was Friday. Warning at this level. Look, they came and kissed it, jumped, came and lost it and gone to hell. But the warning was there days before. It didn't, a day before that, it didn't happen. Likely support, clearly it wasn't. Then this became resistance. So we track it, close, what was that? Close to our target. Okay, so this was my, oh, you can see it. Can you see this line? This jagged line, look. This jagged line right here, I'm gonna make it thicker so you'd see how accurate this stuff is. It's not that I'm crazy smart, but look, that was my line before it even happened. That was the breakout. I said, when they break out of here, the rally should look like this. They came to here and failed. I said, it's close to our target, get out. What are you still doing? And then we came down to here, warning. And I said, this is the downside. They overdid it, clearly. So let's see what happens. Looks like the futures are meh, right? Yeah, I can't see them. It's not showing me. This stupid thing sometimes doesn't show me. So here, by the way, have you ever seen 30-second charts and 15-second charts and 1-second chart? We do those intraday. Why would we do that? Because if you're in an active trade like here, you want to see things before the other people see it. How cool is it to be watching a 5-second chart or a 1-second chart? Every tick is 1 second. Then you see the breakout or breakdown happen ahead of the other guy. So it's pretty cool. We have a lot of fun, but we also discuss longer term stuff. So if you're here to learn about charts, options, strategy, what's the spread, what's a calendar, what's a diagonal, what's a vertical, how they're different, what's an iron condor. And by the way, I do share 8 iron condors a week, but I've stopped the last 2 weeks because of risk. So it's a good, I don't think you'll be upset. Besides, the folks at Benzinga will give you your money back if I suck, and I do not suck.
That won't be a problem. But that is true. There's a 7-day money back guarantee with all of our subscriptions. And I'm throwing this link again into the chat. We only have 8 laptops left. And that's at that 12.97 price point. So let me know if you have any questions on that. Sorry, Zoom people, I just posted that in there twice, and then I'm throwing it into YouTube as well. So yeah, sign up today. All of these people that are throwing tickers in there that we might not have time to get to tonight, guess what? They're probably on the spreadsheet. They're probably on that.
Or they can discuss it during the business hours. I mean, anytime.
Exactly.
By the way, you don't have to be in the chat room all day. Some people, I have a couple of people I call Casper. They jump in, poof, and then they disappear. They ask their questions and then they're gone. They have jobs. Yep. So a guy on Friday said, I have you on mute. I'm at work. I can't I can't have you talk, but he did have a question or two. So I answered in writing. So the chat room, think about it as a method of communication that's more efficient than to have messages or emails. If you had my email, it wouldn't be as efficient. I prefer the chat room setting because it's right there. You come in, you ask, you have a problem. Like on Friday, that one gentleman with the sold put on Tesla, I mean, I bet you he was worried as hell. I mean, 100 shares in Tesla, that's a pile of money. You do not want to wake up owning 100 shares when you can't afford it, right? So
that'd be a lot.
Yeah, it would be a lot. And it was a happy moment. I was able to help him on the fly.
And so maybe just for anyone in here that trades crypto, we do have one question about Solana USD.
I hold it. I own it. It's one of my coins. My thesis is that Ethereum is a bear and we need a competitive product, and Solana is like 3,000 times faster and like 1,500 times cheaper. So I'm for Solana, but everything trades with the chief coin in charge. Okay, so I'll make it very simple. This is Bitcoin. If Bitcoin is rising, they're all rising together and they're all falling together. So Bitcoin fell apart from 46,000. They tried to regain it, failed. They tried to regain it, failed. If they don't regain it soon, they're more likely to lose 33. So they have warning 1 at 34, warning 2 at 33, which is where I got long. I got long Solana, CRO for different reasons, Ethereum because I need it to pay for stuff, and I staked my coins right away. If you don't know what that means, get together with us. I'll explain it to you. And if it loses that, my second phase is add at 28-ish. My third phase is add at 19 to 22. What? 19? Yes. So that's where it broke out from. The old high. Remember, it came to 19 and crashed. It took it years and popped. It never came back. So it needs to test the 28, 29. It should be solid support like 33 was. And it needs to come back down to touch the base from which it sprang to high heaven. I mean, please let it collapse to 35 again. I mean, I cannot believe I didn't file everything I own into crypto when it came down to whatever, 2,900. Like, what kind of an idiot were you, Nick? I wasn't up to speed with crypto. I was blind. Well, now I'm ready. I'm well funded. I'm ready to pounce. And I'm earning 10% on my stable coins. So 10%. Every penny I make from the staking, I buy coins with. And the coin I chose is USDC. Wait, USDC? Not the USDC, the price. How do they represent? Okay, this one. It should be just $1. It just tracks the $1. So the coin doesn't appreciate or depreciate, and you locking your money in USDC, they give you a reward for it, like the old school. They call it staking, 10%. Lock it for 3 months. It's a yearly rate. So that's what I'm doing. And every penny I make out of that, I don't reinvest as dividend. I take it, I buy the coins I want.
Awesome. Well, Nick, thank you. Thanks for spending an hour and 40 minutes with us on a Sunday night. Everyone on YouTube, please give this guy a like and a subscribe. Show some appreciation for Nick. And thank you, everyone here in Zoom as well. I'm going to now show all of you where to find everything on the subscription. Hopefully you're signed up and you can ask about more tickers tomorrow morning. because you can go right into the live trading room with Nick. If you want to, you can trade with him all day. And I'm also going to speak to how you can make best use of this program if you work a full-time job and you can't sit in front of the screen all day. It's a great way to earn while you learn with this opportunity. And you can see Nick right now, he's inside of Benzinga Pro. So this is actually inside of a larger website program with all of the charts and news and scanners and all of that. And Nick's chat room is only available to his subscribers here on the left-hand side, where you can see that every day he posts a plan for the day. So that's kind of your home base for each day. And then every week you have the strategy session on Sunday mornings. You can attend that live and request tickers for him to review. Then he also gives you a spreadsheet where you can see every single chart that he goes over on that presentation. And you can see, Nick, it looks like you want to say something about one of the picks from earlier this week.
Well, yeah, I shorted Lily and immediately panned out the TLT. But no, I'm scrolling through to show them how I shared the ideas. And I was trying to get to the morning note, but I keep scrolling for the day. Tesla is bouncing off. Thoughts on that? Somebody was asking me. So somebody was trading Tesla and they wanted to know my thoughts on it on that day. And I immediately share them with a 1 minute chart. So that helps them exactly for that purpose. So here's my, that was my update on four earnings calls. And I'm testing a new tool. The tool guessed 4 out of 4. I guessed 3 out of 4. So if we can find a golden goose for that purpose, man, that would be fun. But I can't claim victory. One score doesn't represent victory. So, okay, here's my morning note. So my morning note would be like this: the plan for 311, have one every day. The rally overnight, don't be chasing it. It's not the end of direction. Brings us back to last Friday's levels. And also next week about the Fed. Meanwhile, I don't change anything. I stay with that. And then later on, I sent out note of caution. I can't see the time of day for that, but that was like right after the morning note. Today, so I said I usually see this, and usually I have a list of dozens of stocks that have rising demand, and I got none. I was like, what happened? I said I will have a put position for next week. What? Simple debit put spread, or maybe a relatively cheap put through Friday, just in case. That was first thing in the morning. If somebody did that, they made a ton of money on that trade alone. And then the short the TLT note that played out also on the same day. So this happens every day. All right, I'll leave you. I'm out.
Well, thank you. I mean, that's just another good example. And it's not saying that we're right or every single thing is right 100% of the time. That's not what it's about. It's about managing your risk, managing your capital well, and protecting your downside, and not always having to make a directional play. That's what I love about this is with a lot of these trades, you don't even have to know which direction it's going to go. Yeah. You just have the plan ahead of time.
Exactly. If I'm getting long, like the 2 trades I said, okay, I would sell a put, leave a lot of room for error. If I did it in Upstart at 350, that's not what I'm about. If I did it at Upstart at 80, that's what I'm about. That same strategy, they're both statistically viable exactly the same way, but one is not smart and one is super smart. So that's what I'm saying. I try to take boring trades that I don't have to babysit. And this is not a trade alert service. I try to show you how I do it. So maybe you can adopt these methods and stick around because it's fun. So if you learn this stuff and you want to be on your own, you can get the hell out of here next year. But I bet you will stay. I have people that have been here for 6 or 7 years.
Absolutely. And that's a great answer to the question from Alaskan Family on the YouTube chat. What's the success rate of students? I mean, each student is responsible for pulling the trigger on their own trades, but there's a reason why there's over 270 people in the live trading room every single day, and thousands of people that are still with Nick that have subscribed a long time ago and are still in the program. Maybe they're not even trading every single day. They're not all in that trading room, but they're all still finding value from the trades, from the charting, whether you trade stocks, options, futures, it's all right there. So
right,
Nick, thanks, man.
I'm going to bail as soon as I find the off button. I lost my controls. Can you kick me out? Kick me out.
All right, I'll see what I can do here. Let's see here. Make host. Remove. All right. Peace out, Nick. I'll see you. Okay, so that's Nick Chahine, everybody. What a great session with some pretty solid picks that he gave all of us here in the past hour and a half. I'm going to go ahead and share my screen so that we can dive a little bit deeper into how you can follow Nick on a day-to-day basis. And so I'm just resuming the share here. So let me know in the chat if you can see everything okay, and we should be good to go. By the way, there's only 6 of those laptops left. So definitely take advantage of that. And if you can't do the $12.97 right now, I mean, there's no better deal than that in terms of the annual basis. We do have a different level of service that's just month to month. That's only $347 per month. So if you think about it, let's say you can't do the $12.97, which is obviously the best deal. You could still get in for $347 a month. Just follow that same link and choose a monthly option instead. You don't get a laptop with that, but that way it still comes with a 7-day money back guarantee. And you would have access to all of Nick's trades, all of his analysis for a full month. And then it would just renew, or you could upgrade to the annual later on if that's a better, I mean, it would be better for you on the annual after. But you think about it, $347 could change your life in terms of being able to know what you're talking about, learn from one of the best, and be able to see these patterns on the charts and be able to tell where things are going. Jason Raznick and Luke Jacoby in the house. Yes. All right. So where do you access all of this on Benzinga Pro? You log in, and like I was talking about, this chat on the left-hand side here is really your home base. So every Sunday morning, you have access to Nick's live strategy session at 10 a.m. Eastern time or 7 a.m. Pacific time. Nick is on the West Coast, and you can see here, he says, happy Sunday. Later this evening, I'll have a short and important strategy video. Don't miss it. Below is a review of the tickers you requested. So this is a video recording of the live session, and you can click on that. It goes to the private YouTube video, or I can click on this sheet, and we can see that he covered 74 tickers this morning. That's a lot lower than what he usually does. Usually it's from 100 to 140 tickers. But you can see someone was asking about Snowflake earlier. So let's see if it's on here. Snow. All right, so it's not on here. So you would have to request that in the room. But let's say I want to know what's going on with SoFi. I just click on the link for SoFi, and I can see all of his charting and analysis here. So it looks like it needs to recover the $9 level. And he also tells you ahead of time where there would be some sellers lurking. That's just a really quick example off the cuff there. So you have all of his notes, links to his charts, and then during the day, so if you want to see what it would look like for tomorrow morning, you would get right here in the inner circle chat. And if I scroll up to Friday, you'll see where he had, I mean, this is where he's posting that short play for Lily. And he's telling you, he gave multiple ways to take this bearish trade. He said it's rising into a resistance zone. My choice would be to sell a call spread because it doesn't need a drop to win. And then idea for a debit put spread. He's telling you which strike prices and the net debit for where you need the drop to win, and then a net credit of 65 cents for the credit call spread. So he's giving you multiple ways to structure this trade. He gives you the chart explaining why he believes that it could be a decent fade opportunity. And that's just one of the many examples of trades that he gives throughout the day. Then if I go up to earlier on in the morning, you'll see that he has the plan for the day every morning. And this is what it looks like. Plan for March 11. He says, happy Friday, gives you an update on what's going on with the indices. And this is a link right here where you would click into his live session. So this is how you get to that live trading room every day, where you have access to Nick and all day, every day. And you can look at his live charts. He's calling out day trading opportunities. And you can ask him questions about any company. And then he's giving you his charts for the indices and the futures. Awesome. David, welcome. Glad to have you on board. The type of laptop, it's whatever we can get the best deal on the week. It basically, we ship them out on Mondays after the 7-day money back period. So it's we just scour for the best deal that we can get on name brand laptops. So yeah, you should be, as long as you don't cancel within 7 days, then that would be shipped that following Monday. All right, let's zoom out here. And yeah, so you can see that you have access to this chat room. You can click into the live session. You've got the spreadsheet here with all of his analysis, and I might have skipped over it, but he actually posted on Saturday night a link to a form where you can request for him to cover any ticker. Any and all tickers would be on there. And you can see he does crypto as well. So let's see here. I'm just looking at, yeah, and hopefully everybody has a trading computer already. We just find that for the absolute beginners, we just want you to feel like you have everything you need. Some people actually don't have a laptop, and they're just, they just need it. We want you to feel like you have everything you need to build a successful trading career. So you might want to upgrade your computer, just like Nick did later on. But at least this way, with that computer, you'll be able to access Benzinga Pro. You'll be able to access your brokerage. You'll be able to access the live trading room. And from there, from that point on up, you'll be building the skill sets for a long-term profitable career. David's asking, what time does a live session start each morning? About 45 minutes before the open. So at 8:45 a.m. And then that's 5:45 a.m. Pacific time for Nick is when the live session usually starts. And then he's going until at least 4 o'clock, usually until 5 o'clock or so Eastern time. And he usually logs in later on in the trading day as well. Okay, let me get that link. It looks like we only have 4 of these laptops left, so don't miss out on those. I'm just posting this into the chat right now, so you should follow that link. And then I'm also reposting my contact info so that you can reach out to me directly with any questions whatsoever. All right, let's see here. Crypto never sleeps. You're right, Morton, Matt. Level 2 info. We don't have level 2 on Benzinga Pro, but you will see some of Nick's analysis. He has everything on his live trading room. So be sure, once you sign up, be sure to request level 2 quotes through the send feedback button on our system, because we go over all of the feedback on a weekly basis, and we have a ton of active traders that I'm sure would love the level 2 data. Let's see here. What's his average so far? There's a lot of, Mark, there's a lot of different ways to measure the success rates, but with those credit spreads, usually you're looking at an 85 to 90% chance of success when you're selling a credit put spread. And the way Nick likes to sell into fear, you're usually looking at a 15 to 25% yield on those spreads. So obviously it changes a lot depending on if you talk about buying the stock, buying naked calls, selling a put to try to buy it at a lower strike price. But that it just varies a lot because he gives all those different ways that you can structure the trade. But you know, the 85 to 90% chance of success is what you're looking at on a lot of those trades when you're selling those spreads in the right. And of course, he always tells you when it's the right type of situation for those trades. Yeah, HHG, wouldn't that take from your, let's see here, trading profit? Yeah, HHG, I mean, you could make less money if like you're gonna, if you sell a credit put spread, you're not gonna make a 300% gain. So it's more about the consistency and protecting the downside versus getting a 400% YOLO trade where you could lose 100% of it very easily. Let me know if I misunderstood you, but that's basically the cost benefit analysis there between the different ways of structuring the trade. Let's see here. Yeah, just message me directly for any questions. You've got my email right in there, and we will set that up for you. All right, let's take a look at some of this other stuff on here. Anyone from the I'm just double checking the Zoom chat as well. Okay, Zoom is good to go. All right, let's take a look at some of these charting capabilities. So as you're going through these, you can see that you have access to all these different charts from TradingView. And we actually have TradingView powered charts inside of Benzinga Pro. So you can do all of this inside of Benzinga Pro. You don't even have to go to another website. And you can see here, if I wanted to copy his analysis from Asana, I would open this up on one part of my monitor, and then I would just go to Benzinga Pro and type in Asana. And then I would go to the chart tab of the details tool, and I can start breaking this down step by step using the same analysis that Nick does. So I would just pop over to his chart. This is a different company. There's Asana. And so I would just zoom in to, it looks like around 34 bucks. And I could make those same drawings there on Asana. So if I just if I just zoom in a little bit, you can see that you have the same drawing tools available. Could draw a horizontal line around 34 bucks. And then you also have, you know, these other types of drawing lines as well, where you could basically copy everything if you wanted to, just to get used to the feeling of analyzing a stock, understanding what's driving those support and resistance levels. And then you could take notes here in the upper right corner as well, notate price points that you want to keep track of, news catalysts, etc. And you could add it to one of your Benzinga Pro watch lists. Yeah, exactly. Luke's saying get rich slowly with Nick and learn while you're at it. That's a great point, Luke. Yeah, I want to get rich slowly and not lose my entire account from poorly managed YOLO trades. Maybe once in a while it's okay, as long as you know that that's a small enough portion to lose fully. But yeah, you won't get rich quick. You'll get rich over time by winning consistently. Yeah, Morton, we don't connect directly to TradingView, but it uses their charting library with our real-time data. So by subscribing to Benzinga Pro, you have up to the second data where it's a little funky right now on the weekend because the market is closed. But if you're on a 1 minute candle, you can see it moving second by second up and down. And then, yeah, so all of that data is real time inside of Benzinga Pro. There's also some of these other tools. I don't have time to go all over it tonight, but we do have a scanner in here. So if you want to see which stocks are spiking in the last 60 seconds, or once you have that watch list of stocks that you're paying attention to, I could just load like watch list spikes, and I could just see which companies are moving the most in the past 60 seconds. Obviously, no stocks are trading right now in the US at 8:57 p.m. Eastern time. But this way you can immediately tell up to the second if something is taking off. And there's a lot of different filters that you can add in here. Watch list, relative volume, options, share float, short percent. It's all right there inside of Benzinga Pro. And that's included with the options mentorship program. Let's see here. All right, we're looking at green on the futures. All right, let me know if you have other questions. That's what I'm here for. It looks like we only have 4 of these laptops left. So welcome to, let's see, I'm just going to see who joined just now. And shoot me an email once you join, and I'll make sure that you get your extra bonus for signing up tonight. Welcome. This person, I just have it's a funny email, so I can't even say that one. D, I think that, okay, that might be David. Faisal, welcome. Glad to have you on board. Gia and Antoine. Awesome. We'll see you in the trading room tomorrow morning with Nick. I can't wait. That's going to be amazing. And yeah, go ahead and shoot me an email once you join, and I will even, I'll get you something cool from the swag store, like a hat, or we got mugs, we got hoodies, we got all sorts of awesome stuff on the swag store as well. I'm throwing my email one more time here onto YouTube. Jonathan at benzinga.com. 313-221-9214 is my Detroit number. Let's go, man. Awesome. TPX. Someone wants to take a look at TPX. Why not? Let's take a look. I don't know anything about this company, but it's pretty easy to look it up. So I just type this into the details tool, and then I can scroll down really quickly. And okay, so I'm sure most of you have heard of Sealy mattresses, bedding providers, so on and so forth. All right, so they make mattresses. And then I can get a quick look at some of the key data points here on the company. What's their market cap like? What's their float, short percent, etc. And is there any news on this company recently? Looks like a passive stake change. You can click into SEC filings here on Benzinga Pro, as well as taking a look at the charts. So it looks like they had a tough day on February 22nd, and then on March 7th, and they came back up from there. So yeah, that's where I would just look at what was going on during those days. And we can see that there were a lot of lowered price targets here. It looks like they had a Q4. They missed their estimate. So that's what it looks like. It was an earnings situation. And then they announced an increase in their cash dividend. So it's just good. Nick doesn't really use the news a lot for his trading style, but a lot of people do scalp off the news using Benzinga Pro. It's actually how we got started as a software service. So if you do need fast news right away, this news is fast enough to scalp off of, or just to see why there's volatility in the market. And David, yes, there are classes on how to use all these features. I actually run 3 or 4 classes a week. And then there are also tutorial videos. We have a whole video of libraries on how to use all these tools. There's even a section on our help site with Nick's basic trading videos. So we've got tutorial videos here. And then if I scroll down, we have the options mentorship video tutorials. So you can see here for the beginners, breakout versus swing trades, when and how to book profits, stop losses, credit put spreads, call options, definitions and uses. Where do you even start understanding what a call contract is, what's a spread, so on and so forth. So this is a great place to start. Once you're in the program, it's super easy to access. You just click on that question mark in the upper right corner. Yeah, Roble asking what education is included with Pro. Are there recorded courses? All right, cool. So hopefully that answered the question for you, Roble. There are those individual videos. And yes, we do have recorded courses as well, in addition to the live access to Nick Chahine every day. All right, it looks like we only have 2 laptops left. Only 2 left. And remember, if you can't, I really encourage you, do the $12.97. It is the best deal available, period. But if you can't do that, the $347 a month, if you shoot me an email, I might even be able to do a little bit better than the $347. Just for 1 month could change your life. And I'm not exaggerating that. What I have learned from Nick Chahine in his classes, in his live trading, and in the weekend strategy sessions has revolutionized how I think about risk management, how I think about not only protecting my capital, but then even earning money off of the shares that I already own long term. So it's really this marriage between long-term investing and short-term day trading, so you can build your wealth over time, as well as making income on a daily basis. Of course, when I'm not working for Benzinga throughout the day. Let's see, is BZ Pro a different app? BZ Pro it's a website, Morton. It's pro.benzinga.com. That's where you can access it. I'm throwing it into the chat right now. pro.benzinga.com is the website. And then benzinga.com is our free website that doesn't have all the same features or the chat room. And that is basically you can get your alerts for Benzinga Pro through our free app. So if you just go to the App Store, download the Benzinga app, then that's where you can get your live alerts from Benzinga Pro, even though you would need to log into the website on Benzinga Pro to set up those alerts. And I can show you how to do all that once you sign up. It's pretty quick and easy to set up those alerts. Let's see, maybe some of Spencer's scalps this week can generate $1,300. Yeah, I mean, yeah, not only do you get Nick, but check out this new Ideas app or Ideas tool here. Whoever wrote this, I didn't have time to read this actually. So as you can see here, you do get access to other Benzinga Pro members' ideas. So you have ideas from other Pro members. And then if we scroll down here, here's just like right here from whoever Anka is, DocuSign long over 775.80, short squeeze to 76.77 at least. That's just from another Benzinga Pro member. And then you have an expert like Gianni, he actually does newsletters and swing trade picks for Benzinga. He's saying silver is just starting to catch up to gold. And if I scroll down here more, Anne-Marie is amazing. And she gave a short-term iron condor play where she sold some iron condors expiring the next day, and then just waited for the time decay to kick in. She was neutral on the SPY, and she made 61% in 2 days, along with anyone who followed that trade. That was here inside of Benzinga Pro. So you get all this in addition to Nick's chat room. And if I just scroll down here, you can even see this was the actual play. She says neutral on SPY and believe we're landlocked, so on and so forth. And she tells you which contracts to buy and sell. So of course, you have to do your own research. You are responsible for the trade, but I mean, this was an amazing opportunity. And you heard Nick say that normally when the volatility isn't this wild, he gives 8 iron condor plays per week. So you get all of that plus these additional trades on the ideas tool. Awesome. Welcome, Charles. Glad to have you on board. Kieran, amazing. And Dan, fantastic. I will see you in the chat room. Of course, let me know if you have any questions. And you do have access to premium phone support and chat support on Benzinga Pro. So you could always access my team through this blue circle in the bottom right corner. And you could just say, send us a message for the news desk for help or for sales. And we have a great team that can help you right there. All right. Any other questions before we call it a night here? Looks like there's only one laptop left. The 1297, that's good through midnight tonight. If you get to the checkout page, I should show the checkout page. If you get to the checkout page and you don't see the code, I think it's Lucky Nick is the code, then you know we're all out of laptops. I'm just opening up a new incognito window so I can show you what it looks like. But basically, if that's not available, then you can still get if the laptop's not available, you can still get the 1297 price point through midnight tonight, or that monthly rate is also available. You'll end up paying $4,000 over the course of the year, but on a month-to-month basis, that's just what is the best option for some people. So I'm going to the pricing page and then options mentorship, and I will share that page really quick so y'all can see what it looks like. Yeah, Morton, the 1297 is an annual rate, but it's locked in. So when we say for life, it's not a lifetime subscription. We'd have to charge you a lot more for that, but it's $1297 per year, and we're not going to raise that up to $4,000 or $3,400 on you the following year. So you have that price point locked in indefinitely as long as you don't cancel. So you can rely on that year in and year out. And you can see here, and more no, there's not a monthly maintenance fee. You're not going to have to pay for anything else other than that $1297 per year. I'm seeing if there's still any laptops left. If I just type in Lucky Nick, you can see that one only works on the annual plan. And then if I scroll down here, it says $1297, and then you throw in your credit card or your PayPal after you do your name, email, phone number, and you create a password. So pretty simple. You just purchase here, and then you should get an email immediately from our payment system with your login info as well. Or if you go with a $347 a month, then you can do it the same way right there. In fact, I think, let's see here. Yeah, that's about it for the monthly. Okay, I am hopping back over to Benzinga Pro now. Guys, all I gotta say is, I mean, it truly has changed my life, and there's a reason why there's about 300 people in there every single day with Nick, and he really goes out of his way to give you as much value as he possibly can for the program. We really take it seriously that you're trusting us with part of your capital, part of what you have to trade with. And this can really, hopefully you can just be consistent over time. And you won't be one of those people calling me saying, Jonathan, help me, figure out how to make this 50 grand back. I'm down to 20 grand in my account or 10 grand in my account. But even if you only have 5 grand or 10 grand, this is how you can be consistent, build those true pro trader habits that Nick was talking about, and be successful over the long run. Rod put in the number 1. Rod, if you're watching the beginning of this, this will be running on YouTube. So if you're still here at the end, give me an email, shoot me an email if you have any questions. And I'm just posting those links one more time for everyone in case you have any other questions, and shoot me an email for the deal, or I can at least get you some swag if you miss out on the laptops. So posting those right here into the chat, or who knows, I might be able to get Luke and Jason to give you a laptop. Let's see. All right. I hope you guys are all psyched for this week. It should be great. I'll see you in the chat room posting this. Oh, it's too many characters. There we go. Boom. Click there. My contact info. Doing the same on Zoom, and we're good to go. G, Joseph, Krasimir, Miyagi, Luisny, Ricardo. You guys all good to go? Should we call it a night? I could stay here all night. If you shoot me an email or call me, I'll be here. If not, if no questions right now, then we'll call it a day. All right. All right. Thanks, Miyagi. Have a great night, everyone. And I'll see you tomorrow morning in the chat room. Take care.